Yeah, hi, Neil Young here, Managing Director of Elixir Energy Limited. Very pleased to be talking to you again. It's been probably 10 or 11 months since we did so towards the end of last year. And since then, we have been relentlessly pursuing our drilling program for gas in Mongolia. We've significantly strengthened our balance sheet and have a fully funded program for many years to come. In more recent times, we've added a complementary new business, which is another gas, namely hydrogen, in addition to methane. And it's been a great year. Our share price has done well. Of course, I'll say there's significant upside from here, as is my duty to say. And look forward to elaborating upon that in this discussion.
Neil, good to see you. It has been a while. It was the end of last year. Things have gone well for you. But your narrative has changed, it seems. We were talking methane gas. You're now talking the language of hydrogen gas. And in this green economy, we're hurtling towards. That sounds a little bit more exciting. Was that a conscious decision of yours to change strategies?
So I think it's an addition to our current strategy rather than a change. We are still very much focused on methane. We currently have 3 rigs in operation. And over the course of this year, we should drill 20 wells in total. We've been doing what I have rather tediously called rinse and repeating in that drilling program. That's the essence of unconventional gas. But the hydrogen element uses the same skills that we have. It takes advantage of the same location, and we therefore think it's complementary, not a swerve in the road.
But you get my point. There are lots of gas stories out there. Methane gas is, not even that exciting compared to some of those gas stories, right? The market likes this thought of this green energy, hydrogen. There's some big investments being made in the Middle East and elsewhere in the world. It is the future, it seems. Is the focus of the company going to move towards hydrogen? I get the complementary skills bit, but it's just a better story for the market. Certainly in terms of, if I'm looking at what your company's done in the last few months, the market would seem to agree.
I think you're right. The market likes it, but I think there's timeframes here. And China's got an expectation of increasing methane demand for a number of decades, more so than other countries, and that each gigajoule of methane going into China halves the amount of CO2 emissions that come from its current coal use. Hydrogen is a great story, but it's a 20, 30-year story. Now, obviously, we want to get ahead of the curve, but we don't expect to make money or the ultimate owner of the asset to make money for a lengthier period yet. We love the market support, but we want to increase optionality rather than commit to a deterministic view of the world.
Right. Okay. So you got the timing's everything, and feeding in obviously China. You're on the border there. That is where your future lies. You've been able, and I want to come back to that part of the discussion, but I've got to talk about a few other things that have happened since we last spoke. You've raised a heck of a lot of money. Do you want to talk us through those raises and the kind of response from the market each time?
Yeah. So the end of last year, we had some listed options which were due to expire, and we had an incredible take up in those, nearly 99.8% or thereabouts. That brought in $8 million, and pretty much straight away the market could say, hey, this company is fully financed for a few years. It's not come issue. We got very strong pricing response to that, in addition to our ongoing drilling work, etc. That then allowed us to undertake a placement in April to sophisticated and institutions, and that raised $10 million. But that was part of a more holistic raise, whereby we also opened up an SPP to our loyal shareholder base, and that came in at nearly $17 million. So we got quite a bit more support from existing shareholders than we did from the more institutional end, which was a great show of loyalty, hopefully stickier money, and that's been our experience to date. And so in total, we raised nearly $35 million in 4 or 5 months, and that sets us up for a very long time, particularly given the very low cost nature of drilling, etc., in Mongolia.
Okay, so what's happened? Okay, you've raised a lot of money. So we're nearly 35 million. How much of that is left?
More than 30 just now. We're still doing very well. We've expanded our program, but to say the drilling's so cheap that we're covered for a considerable period.
Right. So, how many meters have you drilled? How many holes? What have you done with the money?
So, in the course of this year, we've drilled about 13, 14 wells. We aim to drill about 20 in total. We've shot seismic and are currently shooting more seismic. Many hundreds of kilometers of 2D seismic this year. We're designing a more intensive long-term pilot production test for next year. And so part of the drilling we're doing just now is giving us the data, and we're in the process of flowing fluids to surface as part of that data gathering process. So we're getting set up for a more capital-intensive part next year when, if that pilot production is successful, we'll start to move contingent resources into reserves, for the first time, and that'll be a significant de-risking signal.
Right. Okay. Because it kind of seems to me that with a 280 million market cap, it was a long ways from when we last spoke. These markets got really excited about something, but in terms of the actual work that's been done, it's not a lot. You're going to have to do a lot of backfilling on that valuation. So how quickly are you going to tear through the remaining 30 million by the end of next year?
We'll still have substantial part of that left at the end of next year. We'll move from 20 to 30 wells. I mean, to go from 20, say, to 100 wells is just not practical in terms of regulations, environmental permits, and also the enduring reality of COVID, particularly in a developing nation that we've managed well, but it's still there. It does impose issues from time to time, and it would be foolish to accelerate a program beyond the skill sets and capabilities that we've got. So we are accelerating it dramatically, but we can't go fivefold or something like that.
Right. Okay. So therefore, given what you said about timing around the hydrogen component of this, how much of your current market cap are you attributing to the methane component, and how much to the hydrogen component? With a slightly sexier story, but you're way early in the process there. So what's your view?
Yeah, I mean, breaking it down into value like that's very, very sort of qualitative. But I'd say just based on the share price appreciation since we more fulsomely spoke about hydrogen, then you'd say 20-25% of the market cap is probably resting on that strategy just now.
Really, I'd have thought more. It feels like more. And I say that in the context of what you know about the methane component and how much you've done and how much money you've spent to date, right? So, but like you say, it's going to be a little bit subjective. But my honest opinion, it feels like the hydrogen part is what people are getting excited about. So let's talk about those shared skill sets between that you've got for both of those strategies. So what is transferable? Are you going to need to get new people in to move the hydrogen component, or have you got everyone you need here today?
So as I say, the key shared skill sets are engagement with stakeholders, and this is for any resource stock. You've got to work with national governments, you've got to work with regulators, you've got to work with environmental people, and then critically, you've got to work with local people. Even, this is the lowest population density place in the world, but there's still people there. They have, local councils, et cetera, that we engage with through our methane exploration. And hopefully we're a good corporate citizen. We've helped out during COVID, et cetera. And those same skills are absolutely vital to pursue green hydrogen, which involves, installing renewable installations, building processing plants, etc. And if you haven't got those stakeholders on side, you're not going ahead. So I think we've demonstrated that we've got good relationships at multiple levels in Mongolia. Now, do we need some additional skills that are particularly pertinent to hydrogen? Yes. We're engaging with those additional skill sets, be they engineers or water consultants or whatever. So, but for instance, water consultants, we sort of have them already. Now they're looking for a different sort of purpose. But yeah, I think they are genuinely complementary.
Okay, so what I'm hearing at the moment is relations in country, some crossover in terms of technical skill sets
Hmm.
on the ground, but you're going to need to get some people in. Have you got a plan yet on the hydrogen? And so what is it in terms of how you move things forward? What would we expect to see at the end of 2022, for instance?
So I think, long term, I'll work back from. So I think what we'd see is that there's a multi-gigawatt scale renewable resources here of enormously high quality. They can produce, hundreds of thousands or millions of tons of hydrogen, which can get exported by pipeline. But you're never going to do that first up. What you've got to do is to prove that the concept works. So the initial stage is to build a pilot plant that exports hydrogen, say by truck, to inner Mongolian steel mills, to demonstrate that the renewable resources that input into the electrolyzers are of the high quality that we believe that they are. So we would see it's gathering resource measurements for wind and solar to a bankable level. It's designing the pilot plant. It's engaging with the offtake customers and the equipment suppliers and the financiers who, in this instance, will very much benefit from the interests of the international financial institutions such as the EBRD and the ADB to preferentially finance energy transition investments over fossil fuel investments, just that they won't anymore. But they, in a country like Mongolia, my view is that they very much will want to support this sort of project.
We had a conversation a couple of weeks ago, one with an advisor to the president of Mongolia, also another young lady who's very impressive, who's dealing with the foreign investment component to the government's plans, and a gentleman who had raised 25 million on the Mongolian exchange. Do you feel, as well as the support that you are getting through local and federal government, you're going to need to maybe think about raising some money on the Mongolian exchange to get buy-in financially? Because it's a small exchange, but it seems that they are supporting it. The government is keen to get foreign investment in, and companies like yourself need to, not only ingratiate yourself, but also install yourself into that ecosystem. Is that a consideration? I know you've got money, but is it a consideration?
Yeah, I think, dual listing, as you say, isn't just about, raising money. It's about engaging stakeholders in that sort of fashion. And I've been incredibly impressed by those recent raises that you've mentioned, when such a small stock exchange can raise, material amounts of money for various types of ventures. So certainly dual listing like that is to be considered, and I think in the long run, our assets might completely delist from Australia and be say in the Mongolian and Singapore stock exchanges. That's a very long term optionality, but it's certainly feasible, and I think that's one way to deal with an issue which has increasingly become pregnant, and that is that we're Australian listed. And our business is pointed towards China, and the cursory reader of a newspaper might indicate some tension between the two. But we think that that's ultimately resolvable through a number of different mechanisms, of which dual listing and it could be one.
Well, it's quite interesting. We, looking at the some headlines coming out of China, the diktat that the energy bodies have been told to just go out and secure energy, and that's uranium. Obviously, your product is very, very viable for them. Just next door, are you seeing any increase in conversation, pressure, or just diligence operations from China as a result of those sort of recent announcements?
I'm not directly being approached by Chinese because I think it's too early in the process for that. But one thing I would say is that recent and even very recent events in energy markets will strengthen Chinese desire for security of supply. Now they import gas from many different directions, including Russia. Now, do they want to buy more Russian gas? Well, they probably will, but they wouldn't want to be too beholden to the Russians, as current European experience suggests that would be a prudent move. Do they want to import more gas by boat when tensions are rising with the US? Maybe not. But if you're a Chinese buyer, then gas from Mongolia has got no risk. It's immediately proximate. The country is no sort of geopolitical enemy or anything like that. So we see the asset itself, it has been strengthened in terms of its attractiveness over due to the geopolitical events and the energy market events that we've seen even in recent weeks.
Yeah, I think very, very, very interesting times indeed geopolitically, which could be good news for you guys. Let's sort of drill down, if I may, so pardon the pun, into the assets. So with Nomgon, can you just give us an update as to the drilling, how many rigs, any problems? How are you approaching and tackling it?
Yeah, so this year we've drilled 13 wells to date. 11 of them encountered coals in the window that we're looking for. Those wells vary from pure exploration types to appraisal ones to one that we're drilling just now, which is delivering us data to allow us to design our full-blown pilot program for next year. We're also shooting seismic as well. Of course, that's less interesting from a market point of view. But what these wells do is deliver, brick by brick, a resource base which starts off small, but which is demonstrably expandable at low cost. So last year, we'd established one sub-basin called Nomgon. We've added now 3 new sub-basins that bear coal at depths and which we're proving bear gas at depths as well. So I think that demonstration of being able to build up is what the ultimate energy companies who we want to work with, who have the balance sheet and expertise and scale to develop an asset of this potential size, and that's what they want to see, and that's what we've been delivering.
So, I mean, with regards to those discoveries, how do you go about mapping? You talked about doing seismic. The market's not interested, right? In fact, here's just one for you. Are you a 2D guy or a 3D guy? Because I've got people who'll argue that 2D can be just as good as 3D.
I mean, 2D absolutely suits us just now. As and when we get to the development stage, then 3D could play a bigger role. But I think it really depends on the relative costs. Now, if you're, say, in Australia or America, then wells are expensive, and more so in Australia. But in Mongolia, wells are cheap. And you might ultimately do a pattern development where you just bang down wells cheaply rather than do an expensive 3D program to then over science where you put all those wells. Now, that's a challenge for the full-blown development stage. My view at this point is that expensive 3D is probably not warranted where the drilling costs are so low cost.
Okay. Yes, yeah, interesting debate. So and again, just as a real simple, just looking at some of the questions sent in, you've got coal bed methane, you want to get that, and then presumably you've got coal. It says here. What do you do with that?
I mean, the coal, to the extent that it's licensed under minerals law, and our extraction of gas is licensed under petroleum law. So there can be overlying tenements. And that's very common, for instance, in Australia, and exists with us here. So that if there's coal and someone else has licensed it, that belongs to them. But to be honest, we're looking at coals at 400 meters depth, and they're never ever going to be mined. So there's no real conflict there.
Okay, fantastic. So you've kind of explained the your use of proceeds and what you're going to be delivering by the end of next year. Mm-hmm. Are you at all restricted by I know you're near the border, but are you restricted in any way by the infrastructure? Is the government delivering on that front in terms of roads, power, and anything else that you're going to need?
So there's a surprising amount of existing infrastructure where we are for the Gobi Desert, which brings up images of camels and dunes and nothing else, whereas what it's got is roads and mines and electricity lines and trucks and things like that. So, for instance, in our first discovery area, we're looking at a small-scale power plant, and that can connect into the existing electrical grid rather than having to invest in more grid capacity. And then, to be honest, the roads are reasonable, and the Gobi Desert is so dry that we can drive around with our rigs, pretty much anywhere we want, rather than be reliable on roads, compared to, say, like Canada or Alaska or whatever, which would be hard to access a part of the year because it's wet.
Is that going to be a problem for you down the line in terms of raising money and capital? Is it when do you get to start to understand the economics?
Okay, so I suppose it's the cost of moving it has driven us to pick this location. So just to give you round numbers, liquefied natural gas methane sold into East Asia typically sells for about $10 an MMBTU or a gigajoule. Now, right now it's about $30, but that is hopefully an aberration from the point of view of the buyer. So of that $10, about $5 is paying for moving it from Australia or America or whatever. So $5 for liquefaction, shipping, degas. Now, liquefying hydrogen, putting it on a boat, won't cost $5, it'll cost $20. Right. And that's the analysis that we commissioned from Rystad Energy. Now, if, however, I produce green hydrogen in Mongolia and I put it in a pipeline and I take it to Inner Mongolia in China, that's not going to cost $20. It's going to cost $1. So you can see that the cost competitiveness here is enormous. And then the other factor is, well, what's the cost of producing green hydrogen before I move it? And that's 2/3 dominated by the cost of renewable energy. And Mongolia's got great wind, it's got great solar, and the two complement each other very well. So if, as I see it, Mongolia is going to be absolutely in the top quartile and arguably in the top decile of cost competitive supplies of green hydrogen to China. And being the lowest cost producer in any commodity is where everyone aspires to be.
It's kind of interesting then, because then the dynamic is who captures that margin? Do you share it? Because in a way, you're a captive audience. You could argue that China's a captive audience, but if you can't sell it elsewhere economically, then, and they know that improves their negotiation skills with you. But so, do you see that? You see it as a problem coming down the line, or a nice problem coming down the line?
I mean, it's a genuine point, and I think it's true of other commodities as well. And I think you resolve it by going, okay, customer, I'm ready to FID my project, and I'm not going to, and that's going to cost me X billion dollars. Now, I want a contract for 15 years that sets price or links that price to an index. I don't go and sign up for 1 year and then get stuffed over the year afterwards. So, but I think that sensible pricing discussions would be use principles of Solomon. I think it is what you do. You split the difference and let both parties should gain in a transaction, because if you set it up as win-lose, then usually things come back to bite you, even if you've got a contract.
So okay, yeah, I buy that. But it sounds like they'd be mad not to take everything that you could possibly produce. So that'll be an interesting conversation when you get to that point. I think point well made, understood. With regards to the technical team, it seems like you're going to have to, get things moving in no short order. Not just because I think that the market expectations have been set, i.e. that maybe the market's got a wee bit ahead of itself. But in terms of you being able to start conversations a little bit earlier with a group, presumably Chinese, who can fund not just the hydrogen component, but possibly the methane component, because you're going to be talking to energy departments, energy hungry country and bodies in China. So how quickly do you intend to move things forward on the hydrogen front?
I mean, we are doing work just now, which we haven't yet sort of announced to the market with respect to engineering, legal, commercial, etc. aspects, and we want to move fairly rapidly on those fronts and deliver not only progress but news flow. We're a traded stock and people like that. So we will see that in the months and in quarters to come. And then to go to your other point, what we see even in China with the three national oil companies there is that they are, in their public announcements and their investment commitments, now matching the European energy majors in adding significant energy transition and hydrogen components to them. So every junior company aspires to be attractive to the big boys. And a year or so ago, that was, it's only the European majors who are doing this. What the rest of the world are sticking to their knitting. But now we're seeing, no, that's not the case. Even the American majors are changing. And the Chinese NOCs, I think, will see a company or suite of assets that include methane and hydrogen as being worth more than the sum of the parts.
Now, appreciate the update. We must talk more regularly. It's starting to get quite interesting in Mongolia. And I'm now a convert to having spoken with the government's representatives as to what their intentions are as well. So hopefully speak soon.
No worries, and we'll have to get you out to Mongolia sometime, but maybe not in the middle of winter.